Okay, so that was a whole lot more than I expected, because it actually brings us into a good introduction to our next topic, the idea of sustainable development and how technology can contribute to that, particularly in regard to finance and how financial inclusion improves all the other goals. I'd now like to welcome Siddhant Agarwal. He's the developer relations lead at Zwitch.io. That's a bit of a mouthful. I understand, Siddhant, you're actually part of the open financial technologies, which we heard about earlier during Sanjeev's keynote. Welcome.
Thank you. Thanks, John. Glad to be here.
Okay, we'll just check. We can see your slides. Over to you.
Perfect. Thank you. Thanks so much. So, hello everyone. My name is Siddhant. You can call me Sid. I work as developer relations lead at Open Financial Technologies. For those of you who don't know, Open became the 100th unicorn of India, and I'm super proud of the fact that we reached this milestone in less than 5 years of time. Um, so, quick brief about what we are doing at Open. We are building Zwitch.io. It's an embedded finance platform where we firmly believe that financial services are a means to an end, uh, not an end in themselves. And it's a matter of time where before majority of them will be contextually delivered within an existing product or service, driving better engagement, retention, monetization, or process improvement for the concerned product or service. With this, let's get started. My fellow speaker, Prasanna, said in the good context and good stage about how APIs are being used in finance. So we'll just dive in a little deeper. So we are talking about the age of digital banking, and anyone and everyone wants to be a fintech. From your instant loans to buy now pay laters to even new age credit cards, one is spoiled for choices. From Swiggy offering small ticket loans to its delivery partners, to even electric car maker like Tesla selling auto insurance to its customers. Every non-financial company is a mere step away from offering financial products to its existing or potential customers. And this is made possible thanks to the embedded finance infrastructure providers or enablers. They work as an interface between these financial institutions, that is, your banks and NBFCs, and digital platforms or businesses to help the latter offer financial products and services alongside the core offerings via APIs. So, before we discuss how APIs are powering the banking and financial service industry, let's dive into understand what API economy is all about. For those who don't understand APIs or are pretty new to the API economy, so API economy refers to the exchange of value between consumers and providers with the help of APIs. So, in other words, it denotes how APIs help achieve positive profitability for businesses. And to accomplish so, companies can use APIs to create new avenues by transforming existing product or service. And APIs have actually killed the wait time that goes into building these products or services from scratch. Let's understand this better from an example of a cab aggregator like Uber or the Indian counterpart Ola. So these apps have disrupted the entire transportation industry without even creating the large part of underlying infrastructure or technology, which is powering these apps, which is your Google Maps. Now, they have enabled customers to book a cab with ease in just a few smartphone taps without having to build its mapping system by simply combining Google Maps API with their proprietary product. And furthermore, you can check the vehicle availability, you can confirm booking or make payments using credit card or receive notifications of vehicle arriving. All the credit goes to the APIs that work over here. APIs have been here for decades, and you must be wondering why suddenly there's a growing interest in APIs, why everyone is talking about APIs. Well, the primary reason for this increased interest is the stellar growth in cloud computing. The advancements and adoption of cloud computing have empowered companies to quickly and easily integrate APIs into their products and services. And since the past decade, the innovative power of APIs has led to the realization that APIs can be a critical component of enterprise solutions. It can have an impact on your business, bottom line growth, and innovation. So, what happens when APIs are plugged in or used in the banking and financial services industry? So, banking transformation is driven by API these days. We know this. So, rather than reinventing the wheel, the use of open APIs have enabled third-party organizations or technology service providers and developers, which is your fintechs, to build apps and services around the financial institutions' existing infrastructure or architecture. So, for example, just Prasanna mentioned about DCB banks. So, similarly, financial institutions' existing architecture, how they can leverage it. The focus in today's agile environment is on providing solutions directly to consumers through innovation and better user experience. Earlier, traditional banking infrastructure used to be a closed ecosystem. Banks only provided standard products like your current accounts, your savings account, or your loans, your credit cards, recurring deposits, or fixed deposits, forex cards, etc. And later, when banks started to adopt an app based strategy to access banking services via websites or apps, but now the API driven economy has transitioned traditional banks from just being a financial products builder to financial solutions orchestrators. So they have adapted to a customer centric world by modernizing the core banking systems and fintech organizations. And by embedding financial services, both banks and the companies deploy them can learn valuable information from the users, make lending and insurance writing more efficient, while enabling providers to offer more targeted services. The more data there is, the more efficiently this process works. So this means that in future, we are likely to see a redefinition of how merchants interact with customers, maybe offering personalized banking like discounts and stuff, as well as more accurate loans. So it's a win-win for everyone involved. Banks benefit by white labeling their services, consumer benefit because purchasing is a lot more seamless and convenient, and the merchants who are integrating these solutions benefit because conversions increase and costs are often a lot cheaper. So, all in all, APIs have enabled banks to become data driven institutions that provide a broader range of products directly to consumers from the platform of their choice rather than restricting it to them. So APIs have tied the banks and the fintech companies together by allowing banks to exchange data with API banking service providers. So in this way, fintech companies can support their existing products and develop modern solutions on traditional banking infrastructure. These products and solutions can be seamlessly integrated with other organizations using APIs. So, just to do a quick recap, this is what is happening behind the scenes. First, banks will develop APIs for its products or service and externalize them to so that a partner, basically an embedded finance infrastructure provider or enabler, can use those APIs. Through APIs, banks will pretty much govern the product, just the way banks UPI APIs to a payment aggregator won't have the check account balance API, but banks will offer it only to a PSP app. And also, do not expect all banks to have ready-made APIs. Few banks have done substantial investments in developing APIs for third party, but few have not. Plus, few banks are flexible, but few are rigid for any customization. But assuming that the banks have the APIs, so third parties later on consume those APIs and launch the products. So these tech enablers that take care of the entire backend part, including integration of customized banking application, banking APIs, banking partnerships, compliance, security, and so on, and even co-create products. So as a result, financial products and services that regularly took over 18 months to launch in the past can now be up and running in a matter of weeks for a fraction of cost and complexity. And that's the main value these enablers are bringing in. Businesses looking to embed financial services in the platform have ideally have two options. So you can say that, hey, why can't I go and partner with the bank directly or create and sell the service in house? Why do I need to partner with an embedded finance infrastructure provider? So Ola has done this in house for Ola Money, while Swiggy has decided to partner with ICICI for Swiggy Money. So if a merchant integrates with the bank API directly, efforts will increase. If the merchant wants to add in multiple banks. Alternatively, merchant can use a payment aggregator or technology service provider's API, who in turn would have integrated with multiple banks. Just think it over here, Russian nesting dolls example, like one doll is housing another doll, the second doll is housing another one. So that's how the chain goes in. However, these are two different stories, and it is yet to be established which one will be more successful. Although a partnership is definitely a win-win for both, as platforms can continue to focus on the main offering, while the embedded finance infrastructure provider or enabler takes care of the entire backend chain and set up the finance layer. Now, when it comes to the usage of embedded finance, there are four major use cases of EF for a digital platform. So, first one being your payments, like your e-wallets or instant payment. The second one being your lending, like your BNPL, EMI options, digital credit cards. The third one we're seeing a lot of traction is insurance, and the fourth one is your investments. So, and integrating these banking and financial APIs or offering these services as part of your core offering can help organizations with improved customer experience, make continuous innovation. You can even launch products to market faster. You realize new revenue opportunities more quickly and many more with very less cost. And if you see that embedded finance is a new concept, definitely not a new concept. It has been in existence for many years now. So if you look around and all the big techs are in finance. So whether it's an Apple credit card or an offering from Google, Google has Google Pay, Facebook has Facebook Pay, Amazon has Amazon Pay. So all the big tech companies have now supplemented the software or hardware offerings with extensive financial arms. However, the momentum of embedded finance among digital platforms has only started to gain traction, specifically in India, as they look to offer services beyond just wallets. So, by offering financial services, they can subtly lock in their users and bring them deeper into their respective ecosystem, beside adding new income streams. Today, companies across industries like your insurance, grocery, logistics, manufacturing, and e-commerce are looking to launch their customized embedded financial services, or maybe add a new business vertical altogether. In fact, I just saw this one. The 150-year-old Indian Postal Service is also undergoing a massive transformation to offer financial services that would serve almost 70% of its revenue. Now, if you're wondering where to get started, how to get started, so you can, of course, get started with Zwitch. Zwitch.io helps businesses build their banking services by embedding financial products like UPI, insurance, credit line, etc., in their user journey. Transforming into the embedded finance model will enable your business to give a wide range of banking options to your customers, making the product stickier. Hence, customers interact a lot with the product and end up doing business activities through it. It will help your business earn more than just the platform fee from your customers. And with Switch APIs, businesses can actually open a virtual accounts, current accounts, or savings account for their customers on the go. They can even collect payments from customers seamlessly via UPI, NEFT, IMPS, or RTGS. You can reconcile the incoming payments from multiple customers. You can issue co-branded debit cards or credit cards, offer loans and track repayments. You can validate KYC like your PAN, Aadhaar data, and bank account details of a customer instantly. Again, just recalling what Prasanna mentioned, this data can be later utilized again by you're creating like a whole bouquet of services over here and many more. So what are you waiting for? Just go ahead and build your own banking platform with Zwitch. That's the website zwitch.io that you can check out. You can follow on Instagram, on LinkedIn, YouTube, and Twitter. Now, while the embedded finance trend is only just getting started in India, it is touted as the next big wave in fintech. In the developing world, it has the potential to be much more disruptive and life changing. We have already seen this, like, for instance, WeChat introduced WeChat Pay in China or Gojek in Indonesia. So WeChat started as a messaging app and Gojek started as a ride hailing app. The platforms today are bringing bottom up financial inclusion to the Chinese and Indonesian markets due to their reach and connect with customers across regions. And closer home, it remains to be seen if Indian Postal Service will have a similar impact. But the ultimate goal of API economy in financial services is to meet business challenges. It facilitates the creation of user-focused apps that support line of business goals and improve the flow of data and information across operations. In fact, the emergence of API-driven platform economy will drive significant change across the financial services industry, and no one can afford to stand still. APIs will become tools that will allow fintech companies to enable connectivity between traditional banks and consumers, while inspiring innovative developers to create new products, improve existing services, and work more efficiently. So, in the end, I will leave you all with this interesting quote by A16Z. 16Z. I believe nearly every company will drive a significant portion of its revenue from financial services. Every company, even those that have nothing to do with the financial services, will have the opportunity to benefit from fintech for the first time. So, Yeah, that's it from my side. Thank you so much. I hope I was well within time.
Thanks very much, Siddhant. I have some questions actually, and particularly in regard to that last point you made from Anderson Horowitz, that I summarize as every company will offer financial services. So, in terms of the path towards a traditional company starting to offer financial services to their customers, particularly for a traditional business that may have only just digitized. Before the pandemic, a lot of companies were talking about digital transformation. In the last 2 years, they've had to do it, and so there is an opportunity there to start offering financial services as well, and embedded finance. But it is also a new thing to learn for companies that have um, treated payments as an afterthought. Well, they've not an afterthought. They want the money, but they they haven't um, they haven't really thought about the infrastructure required to receive payments, make payments. That they've trusted other organisations to do that, and then they probably. But we see more and more companies like Grab in Singapore, Malaysia, that have developed their own their financial arm, and other firms that have realized that they have some scale, and they they may want to implement their own payment gateway, uh, or other things that are going to benefit both their customers and also own reduce their own costs and dependence on other things. So what do you see as the sort of the steps that such a company may want to take, as in order to integrate embedded finance into their offering?
So just to rephrase this question,
Mm.
you're kind of asking how a traditional organization, which maybe just has gone digital or about to get digital, versus a digital first company, because the digital first company will have better capabilities, they know how to
Mhm.
manage things. But how will a traditional organization would be able to embed financial services,
Mhm.
and what do they look at this entire?
Yeah.
So pretty good one over here. So what I am seeing that how these services are getting offered to traditional businesses is via an existing platform. So for example, let's say the accounting platform which they use for their businesses.
Mhm.
Um, Even the traditional business no longer uses, let's say, the traditional manual bookkeeping. They are
Yeah.
now doing it on, let's say, Tally or Zoho Books, or they're doing it on Open Money, for instance. So when they are using those products, so these services are getting embedded in those products
Uh-huh.
by the organization. So Zoho Books will tomorrow, basis what your spends have been, can analyze and let you know, okay, Zoho can give in X amount of working capital loan to you basis what
Mhm.
you have in the books. So
Yeah.
that's how the financial services are getting embedded and are being offered to the traditional businesses now as well, where those businesses which do not have this kind of a capability, they can still be using those services. Now
So,
again,
so it's sort of the solution providers are effectively exposing APIs that enable other parties to leverage that, and we've heard examples about the Salesforce App Exchange. Um, Other examples would be things like Shopify, Zero, and Intuit, the accounting solution providers. We had a speaker from SAP yesterday, also talking about how they integrate with banks. So, okay, so there's sort of an ecosystem approach to
yeah.
the embedding of finance, so that it helps traditional companies provide an entry point into that.
Correct.
Okay.
So even the traditional business then further offer those financial services to their customers. So let's say Zoho says that I'm giving you a capability, or Open Money says that I'm giving you a capability that, hey, you can open up savings account for your customers using my platform itself. It's just
Hmm.
that it will be powered by us,
Hmm.
powered by Zoho, powered by Open, for instance. So that kind of a transformation is happening these days, where things are becoming more contextually delivered to the business, to the end customer, and now the businesses are no longer thinking about why it's not white labeled, because they know if they want to white label it, they can do it on their own. Uh,
Hmm.
uh, that needs capabilities. Another movement which is coming up along with APIs is the no code, low code movement, especially in the embedded finance space. So APIs, of course, gives you the deep integration capabilities. You can easily integrate. Now, when you ask about traditional business, so when they don't have the enough capabilities in house, so what they can do is they can use this low code, no code environment, which most of the embedded finance platforms are now coming up with, which also has a low code, no code, which I didn't cover. I covered a
Hmm.
specific API part. But if any business doesn't know how to build this from scratch, how to integrate APIs, it's a simple drag and drop kind of an approach. There's a templates available. You can easily use those modules. You change in the colors, you white label as per your requirements. It's
Uh-huh.
becomes easier for anyone who doesn't understand programming also to offer these services or embed these services.
Yeah. Okay, so I can understand that approach. I mean, when you look at, say, Stripe as a payment, you can connect to their API, or if you want to integrate it into your code, then you can use their SDK for several different languages that they offer. And if you don't want to do any code at all, then you can use their checkout page, and
Exactly.
or use somebody, or if you're using a WordPress or other type of application, that somebody may have created a plugin that will access the Stripe API on your behalf, and you just have to plug that into your application. Okay, all right. Well, thanks very much for sharing that, Siddhant.